end to end. So there will be some small percentage of people who will do it. So on one side, it's a facilitator. On the other side, if you think wild, I sometimes think Google could be the next big advisor in the marketplace. It knows everything about you. It has all the trends and analysis and data that you want. It might just invent some product that makes simple asset allocation, and it could become a distributor in the technology space. Or some other platforms could, as Rajiv mentioned earlier. So there's both a competition as well as a facilitator angle to it. As far as direct is concerned, my data could be slightly off, but I do remember conversations that I've had with my colleagues in BlackRock, and that says that even in a market like the US, for instance, the total amount of money that comes through direct as a proportion is about 18%. And it's a market very, very like India in many senses of the word. Of course, they have a far more evolved RIA channel. We don't. We've just made a beginning, and it's still just a drop in the ocean. You move to a market like Australia, which is also a retail kind of a market. The direct over there is a little over 40% of the market. So it's about trying to expect in India what would happen. Would it go the 18% way or whether it would go the 40% way? And I think the answer to that lies that the reason for Australia is because of their superannuation plans where you are mandatorily as employees, and there's a larger proportion of people in the organized sector, obviously, compared to us, who need to invest into tax saving plans automatically through their employers, and that takes the direct component up. I think it'll go more the US way as far as we are concerned over here. And I also think that, as Himanshu mentioned, even if something were to happen, and there's fears around distribution that AMFI is coming up with MFU, the mutual fund utility, it has direct, and customers could go there. I sometimes feel that let customers come in direct, if that be so. In 6 months, they'll convert to customers of distributors because they won't be able to do the whole thing themselves. They will taste it, and what we need is really people to taste the experience with mutual funds, and I'm sure that more and more people will actually graduate to using advisors and planners, and that's what we've seen worldwide. The last point to this is, again, media, because when we talk about technology, it's really so much of information out there. Much of what I'm hearing from my colleagues in the West is that there is such a deluge of information in the media and this growth of social media and technology, and you add all into that, that there are more investors going to advisors today than they want to do it themselves, because it's just confusing with all that data. So there's opportunity there as well.
That's a very interesting thought. Himanshu, I'd like to ask you a simple question, or maybe difficult, depends on how you would want to do it, because I'm going to ask you to do some crystal ball gazing. Sorry? I'm going to ask you to do some crystal ball gazing here, okay? And after you, I think anybody can just chip in. We've traditionally seen that over the last 20 years, this industry has grown primarily on the basis of either long-only equity, various types of long-only equity, or duration funds, various types of duration. If one were to look at the next 5 years, sitting here today, and do some crystal ball gazing, what do you think could be a segment which will grow, which we've not seen grow so far? Is there any underserved opportunity? And I'm talking on behalf of my advisor friends, okay, who keep wanting to add value to a client's portfolio. What, in your mind, could be the next big asset class, which somebody should be looking at very, very closely, monitoring closely? It might be dormant for 4 years and then take off in the 5th year. I'm not asking for a linear growth sort of a projection, but just purely from your point of view, what do you think is the fastest growing segment?
First of all, thank you for asking me this question first, because it's very close to my heart. You are very correct when you tell that so far we have sold molecules and not medicines. Now, we have reached a stage where going forward, we are going to see products with explicit linkage with a client's investment objective rather than the composition of the portfolio. So, rather than calling a product a mid-cap product or an equity product, you will see products with things like multi-asset, retirement planning, long-term investing, liquidity management, these kind of nomenclatures with the sole approach of finding the solution for the investor and linking the product with those kinds of products. As far as that goes, there are two principal ways in which this can happen. One, which is at an infantile stage in our industry, which is the fund of funds. We talk a lot about fund of funds, but to my mind, because that's the most ignored segment in our industry. The power that it can bring to an investor, to an advisor, is severely underestimated. Second way, which is that of wrapping the products such that they bring the desired solution to the forefront. That is so far big time in Western Europe, from what I know. But that is something which will come in India and will be propagated by advisors more than the asset managers. So we will get more into the role of core manufacturing of the components, and they will get more into the role of packaging and finishing it for the investor. So I think in the next 5 years, bulk of your growth will come through solution products and products which are clearly connected to the goals of the investors and articulated accordingly.
So if I may
Yeah,
add,
please go
I
ahead.
think while, I would have loved to, see that, the growth would come into solution-oriented products and this thing, but unfortunately the reality is that these things would take a lot of time. We are on that track, but in terms of real size, it would take few years to build up. But on an asset class perspective, I think what we look at it and what the number trend shows, that, equity is the asset class in India. How much I would propagate solutions, financial planning, but, this is, finally, the investors, worldwide, investor behavior is driven by returns globally. I think what it looks at this point of time on ground is Indian equity assets would grow from 3 lakh crores, which is now, to about 10 lakh crores at least. This is the size of the mutual fund industry today. And look at the size and how when the investor is coming in at the peak and some numbers. And why I'm saying equity and why I'm saying at the peak in 2007-8. The gross sales of equity in the Indian mutual fund industry was something about 1,30,000 crores. The net sales was about 50,000 crores. We are 5 months into this year, and hopefully this is the early stage of the next bull run, the first year of the next bull run, and the first year we would cross both these numbers. So we are set to cross the peak of the last bull run in the first year of the starting bull run. So you can imagine what could be the size of growth in this thing. While, so that's the asset class which is going to grow. However, as a manufacturer, I would love to put my energies and efforts on creating solution-oriented and, outside-in propositions, more and more. So while other things will grow, but this would be the disproportionate growth in the industry in the next 5 years.
Let us rephrase this question, it's like which asset class will grow and what I need to
I
advise.
was worried about that. Somebody
Yeah.
would question my questioning.
Yeah, let us not look at which asset class will grow and where I will do. Let me focus on my investor. Let me make my investor wealth grow, and let me give a solution what my investor needs at this point of time and what is that I am serving to him. Let the investor be centric to us, then we need not think of 2008, we need not think of 2020. Investor wealth creation is my wealth creation, and that could be an approach I look at we need to follow. Then that can address the previous question too, whether it is a direct model, indirect model, it is just irrelevant. Whether technology, no technology, it is irrelevant. I look for my investor, I look for my investor wealth creation, and my investor is centric in my every advice. It makes everything redundant, and I think intermediary will flourish, institutional will grow, and investor will grow. I think 3 eyes will have a place here.
Ajit?
Yeah, because I'd like to take this in the same angle as Mr. Rao took, which is that, look at it from the investor's perspective. According to BlackRock, for instance, one of the biggest crises that people will face in their financial lives is the crisis of longevity, which is that people will live longer. The generations that are there today and are coming will live longer than generations in the past. The reality there, therefore, is that you're going to probably work X number of years, and then you've got to have much more number of years in retirement, and you need to deal with it. So my sense, therefore, is that if you looked at it from that angle of the fact that people will live longer, and therefore they would definitely need to consider that their investments would last them much longer than generations in the past, then you're looking for asset classes that can beat inflation over long periods of time, and sustain for, till their lives run out, which could be 90 or, by the time they're 90 or 95. So it's undoubtedly equity as an asset class. So therefore, there is, the challenge, of course, is educating people and, getting them to realize or appreciate this challenge. And I'd say that, both the media as well as the industry and all participants, whether it's advisors, will continuously make that attempt to do that. So there is definitely a case for that to be one of the largest pools of money.
I'm quite enjoying this discussion, and more so because I get to ask all the tough questions. I'll throw the forum open to the audience, but before you ask any questions, my only request to you is, and this is in all seriousness, you wouldn't have heard the word regulator or taxation coming in any of the discussion points here. So my request to you is when you ask any question, please stay away from something which we can't control. So I leave the forum open for questions.
I need the participation of the audience.
The back there.
Please, sir. Can I have the mic, please?
After him, there's a person at the back also which will raise his hand.
My question is, as we were discussing about the different types of mutual funds, haven't we confused the retail investor by launching so many schemes in the market? Top 100, 200, multi-asset, mid-cap, multi-cap. All mutual funds are launching similar kinds of schemes, which are, I'm not sure whether they are really different in each aspect, what goal they have.
Anybody would like to answer?
See, I have a slightly different view. One, as I said, and I do agree that, some of the funds which were launched earlier when we were growing were from a pure asset gathering perspective in the early days. And that's why I call it that it is an evolution stage. But at this point of time, I think that one, on a generic long-term basis, a lot of that is correcting. Because now you can't do, regulatorily you can't launch products which are similar to each other apart from the close-ended series which could be specific. But I have a slightly different take to it. The fact is, as a manufacturer, while we launch responsible products at different point of time, but we are catering to different audiences, different mindset, different behaviors at all points of time. So we would launch in products but the real onus would lie upon the financial advisor to choose the right proposition which fits into the specific client solution. So from our perspective, while the onus is launching responsible products with clear differentiation, sharper differentiation that is going to happen, but the real onus of taking the right product to the right audience, would be for the advisor to take it. Not that I'm shirking the responsibility in saying that we should not do this. As I said, we are launching responsible product, but we are launching for different segment, different behavioral, different kind of psyche of investor at different stage of at all these points.
No, I think there is a merit in what you're mentioning. There are two aspects of our dealing with investors and market that we need to improve. First and foremost, almost inadvertently, we link the fate of our industry with the fate of equity markets. Somehow, the race to gather more assets often takes over the need to provide the right balance of products to our investors. And it is evolving as the industry is evolving. But I would like to strongly mention that this degree of differentiation is definitely becoming an important criterion in all the series of launches that are seeing now. If you compare it with the 2006, 2007, another kind of a bull market, you would see that that has tapered down a bit, but we still need to work a lot on it as an industry.
A gentleman at the back who, yeah, please.
Thank you. My question was about corporate bond market. I mean, we saw the discussion that a lot of funds are channelized to fixed deposits. I mean, I've just graduated from college. A lot of my friends, we are working in financial services industry. And in spite of that, they are investing in fixed deposits and things like that. So I wanted to know, why do we have such a shallow market for Indian corporate bonds? I mean, they are not as risky as probably equities. They give well fixed returns, and that would be one good way for corporates to raise money.
No, thank you for the question, but I really do not feel that corporate bond market is shallow in India. There could be issues of liquidity, but in terms of the outstanding, there is a vast market out there. You see, the way our financial system has been structured so far, there has been natural incentivization of the channels which serve the social purposes of the government. So whether you talk about banks who get the maximum share of retail savings because they buy a lot of G-Secs mandatorily, ditto with insurance, ditto with provident fund. What we've seen is that the corporate bond typically grows along with the growth of private sector entering into the industry. Okay. Over the last 5 years, if you see, the corporate bond markets have grown more than 4 to 5 times. So for a time when the entire capital market in general is in a lackadaisical situation, you are seeing a corporate bond market which is growing by leaps and bounds.
Right.
So, given what is the appetite that we have as an industry, there is a lot of scope and lot of capability to invest in corporate bond market. And the future, in fact, is even getting better because it's getting, with more participation, it is getting deeper and wider, and more issues are coming in. Okay. So that's what my take.
I think he talked about appetite, and I would like to interpret it completely differently. I think we are whetting our appetites right now. But before we go, I just can't resist one small morsel. I'm going to be asking the audience also to participate in this. It's going to be a very simple question. Okay, please take your pen and paper, because I'm going to be asking the panelists very pointed questions. 2 questions. They're going to telling me some answers. I haven't prepared you for this. This is completely extempore, so please don't blame them for anything. I want you to jot that down, and I'm going to ask you which of the panelists do you agree with the most. Okay? And let's see, in the winning panelist, you will give an award.
All right.
Right? Okay, so my question is, starting with you, Himanshu. We are sitting here 2019, having this conference, okay, hopefully in a suburban part of Bombay, because that would have taken off much more than the South Bombay piece. But 2 questions. One is, what do you think will be the AUM of the Indian asset management industry? And question number 2 is, what do you think is going to be the breakup of the AUM? How much debt, how much equity, how much others? 2 very simple questions to all panelists. It's unfair to you because I'm giving them time to think. But since you've handled most tricky questions, the AUM in 2019, September, okay, and the breakup of AUM between debt, equity, and others. So I would request all of you to jot down what the panelists are saying, and then let me see how many of you agree with that.
Okay, my take on AUM would be around 16 to 17 lakh crores.
One figure, I want one figure.
Okay, 17 lakh crores.
17 lakh crores. And what would be the breakup?
I would say equity will move up to almost 30 to 35% of assets.
Okay.
Fixed income, long term will be almost 35 to 40%.
Okay.
And the share of money market will come down to 15 to 20%.
Okay, so I hope everybody's jotted that down. Ajit?
Well, I'm going to steal a number from Himanshu, what he said earlier. So I think it'll be 20 lakh crores,
okay,
with 10 lakhs being in equity, which is currently 3 lakh. And of the other 10 lakh, you're going to see at least 5 lakhs in the cash segment, because I think a lot more people will participate from savings accounts to cash in this.
Cash would include debt?
No. So 5 lakh in cash and 5 lakh in
Okay,
debt.
sorry. 10, 5,
20 is my number, with 10 in equity, 10 in debt.
Wonderful. Himanshu, sorry, he
He's
jumped
already
the gun.
stolen my number.
Yeah.
So I am anyway I'm in 2019, I'm not going to be here. I would have been retired and sitting in Goa enjoying my holiday there. So, but I think, I do agree. So so today we are at 30%, our asset allocation, we are 30% in equity today. In 2007-8, we were around 55% of the assets were in equity. And that's going to be the trend in a market which is so, that's the rationale for 10 lakh crores of equity assets. And purely, 20 lakh crores, our GDP is going to double. Even if we don't do anything wrong from here, assets would at least double from where we are sitting. So I think I would agree 50% would be in equity, I would say, again, I would tend to agree that, almost a balanced 5 lakh.
I can't allow you to agree.
We'll share the
because-
prize.
No, no,
We'll
that's,
share the
that's
prize.
not done. So I'm going to force either of you
We'll
to
share
rethink.
the prize.
20 lakh crores is fine, but debt, equity, cash, remember there's a prize. Okay, so I can't share the prize with you. Sorry, I
Okay.
can't let you share the prize. I'll take the prize. Okay? So you have to, either Ajit or you have to
No,
give me
so-
a more pertinent number. So it can be a decimal point here and there, but I'd like you to change.
Okay, okay. So decimal point.
No, don't take me literally. I just want you to rethink.
Yeah.
Okay, so
No, but I genuinely feel that 50% would be equity, almost 30% would be debt, and
Okay.
20% would be liquid.
Okay.
I think, there is no choice for me but to go for whatever. This number I look at, I'm little bullish. I look at the assets under management will go beyond 20 lakh crores. And 60% of it could be in the equity. And the reason being, at this point, 30%, if the market quadruples, I have my existing assets multiplying. And the fresh money which is coming equal to that, probably we end up at 12 lakh crores of equity assets by end of 2019.
Wonderful. So now I'm going to ask the audience, how many of you, and you can put your hands up, and somebody has to do the counting for me. I've got these blinding lights in my face. How many of you would agree with Himanshu?
If you want more wealth for yourself, please vote for me because I said 12 lakh crores.
That's unfair. You're
and-
going to get disqualified for this. Okay, so I think people are more bullish than that. How many of you are going to agree with Ajit? Okay, so Vyas, are you doing the counting? I can't see too many people. Face sprinkling. How many of you would agree with Himanshu? Okay. How many of you would agree with him?
Oh.
Thank you so
So
much. I think.
He wins the prize. Thank you, everyone. And I hope that with 20 lakh crores plus of assets under management, we will at least double the number of AMCs in the country. Thank you very much.
Thank you so much to all our panelists for giving us the insight. Thank you so much once again. I'm sure this would help our audience. Sir, we would like to give you mementos also. But then we missed the round. You were supposed to ask some questions from the audience and... Just quick 2 minutes and you'll throw a question to the audience. The audience who will correct the answer correctly will come here for the memento.
So why don't I ask my fellow panelists, so since you've won the prize, why don't you ask the first question?
Okay, I'll put a simple question to everyone. How many of you don't look at the asset size? How many would like, any one of you who would like to have your investors doubled next 1 month? Now, if you have 100 clients, I think, sir, for you. I don't, every month, can we double our investor base? Sir, you can come. No, it's like, don't look at doubling the assets, double the investors, assets will multiply.
That's the reason I put my hand up.
Thank you so much.
Yes, sir. Please.
I believe more investors is more important than the more investments. Thank you so much.
Thank you so much.
So you can ask any question. You can ask how many legs does a spider have, or how many tentacles does an octopus have. I'll win both the prizes, incidentally. But I think some trivia. Let's have some fun before we go out for lunch. So how many dishes are there in today's menu? Something like that.
Well, let me ask a question then. One thing that we all know is that while we talk about a country of 1.2 billion people and all of that, at the end of the day, when you want to make investments and when you want to get investors, they should have a PAN card. How many people pay taxes in the sense that, from the PAN card holders, how many are tax-paying PAN card numbers? Or you could tell me what's the total number of PAN cards in India. One of the two numbers, anyone will do. The closest number will do. Sorry, how much? 2.5 crores paying tax? No, you can get closer than that.
Somebody said
Anybody else?
2.5, somebody said 1.2. Okay, so come on, guys. We manage people's wealth.
Now that's trivia.
Yeah, we should know about that, right? 4 crore PAN cards are there, Ajit.
Well, I think you're closest to the number, so you can come up. I mean, for the number of people who are paying taxes, though the number of PAN card holders in the country has been variously quoted. I mean, if you saw numbers, and these numbers don't come out too frequently, but the last number was about 12 crore people, 120 million PAN cards. But the number of people who pay taxes, because a lot of people fall under the tax slab, is about 3.3 crore. So that's closest, so you can come up.
Please come.
That's 33 million.
So we have only 2 questions, or can we ask 2 more?
2 more.
2 more? Okay. Himanshu?
Okay, so,
Himanshu, why don't you go ahead?
okay, on the,
Thank you so much.
so I'll quickly borrow because technology is the in thing. So I'll just quickly ask you, any idea? And now we are seeing the mobile phones being sold only on, you know, the Flipkarts and these. Any idea what is the total size of e-commerce market in India? Every year, how much merchandise, how much products are sold? What is the size of the e-commerce market in India? No.
You said 27,000 crores. So there's 27,000 crores for you, Himanshu. I think there's some eBay type activity now going to happen. Somebody will say 50,000 crores.
Is that? So the right answer is roughly about 75,000 crores, which is expected to grow by 3 times in the next 2 years.
Wow.
So
That's awesome.
yeah. Okay, so but since you tried and you were the closest.
I want my award. You're the closest. Please come and give me. I like that.
Because we've got to realize people are hungry.
I'm sorry. The organizers forced that on me. So, Himanshu, up to you.
Yes.
No, he's going to give an award to Himanshu Vyapak.
Thank you so much. Sorry, but one more question, please.
Yeah, last one. And technology is important, all of you said. So, iPod, iPad, iPhone, and which is the latest gizmo hitting towards personal electronics? All of you can give me award.
So you can pick one of them to come and give you an award.
I can't see. You can actually.
I mean, you say who is the closest?
Yeah, the
Because a
first
lot of
gentleman
people- Okay,
in the
please
blazer.
come.
Yeah.
Yeah.
This is even simpler than how many legs does a spider have.
In fact, I was going to ask the launch date, but I thought that would be difficult.
Please come. Thank you so much.
Thank you, everybody. Thanks for your time.
Once again, a very thank you to all our panelists.